A very good afternoon, good morning. Welcome to HYCM's webinar with myself, Giles Coghlan. I do hope everybody is doing well. It's quite an interesting week that we have coming up, so it's worth just getting ourselves up to speed with what's going on. Let me just check everyone's okay. Yeah, very good to see you. Alejandro, good to have you there. Laritza, Johan, Mihai, good to have you there. Welcome, Mustafa, SH and UT. Just other folks are signing in. Don't forget, as we look at different entries, exits, different instruments, economic news events, the whole idea of this workshop webinar is not that we are providing a signal trading service. I'm just letting you look over my shoulder so how you can see how I am as a professional market analyst preparing for these economic trading events and what impact I'm expecting. This week we've got an interesting week. It's got some good data coming out for Canada with the CAD inflation print. That will be a very interesting one coming tomorrow. Also got the US dollar core PCE print for the US, and that could really impact the dollar this week, as well as the Eurozone core inflation, a major focus of the ECB, as is core inflation generally amongst major central banks as they fear its rise. And we'll be looking at gold and having a quick look at oil with what's been going on. Now, without further ado, don't forget, if you need to ask any questions, don't forget to ask the questions in the Q&A box or the chat box. There we go. Okay, so without further ado, let's go over to the screens. Now, let me just quickly run through with you where we're at. Now, what we're seeing at the moment is we're seeing equity markets pulling back. You can see here, you know, the Dow, S&P 500, NASDAQ, German DAX, FTSE 100, China 50, all pulling back lower. There's been a general consensus amongst many market participants that the recent run higher in stocks is potentially stretched. And that's meant traders have been very reluctant to put on new longs. And we've seen a sort of pullback in stocks. There's also a growing excitement over bonds. If you just take a look at bonds on the weekly chart, what you can see is that we're just starting to see some bids coming into bonds. Now, when bonds find buyers, the yield moves lower, okay? So at the moment, with a potential recession ahead, a lot of investors are looking at bonds and saying, actually, you know, that's a 3.68, 3.7% yield on a bond. That's quite attractive. Potentially, I could look to buy a bond and get the capital appreciation. And if inflation is, you know, starts to fall and central banks start to get under control of inflation, then yields will start falling lower. So there's an attraction to buying bonds at these levels. And that's what a lot of analysts are talking about. So we could see yields continue to move lower over the next few weeks. And also we're around the middle of the year, and a lot of portfolios will be looking to rebalance their positions. And a lot of portfolios favor a 60%, 40% stock bond split. So in other words, if equity markets have really been surging higher, perhaps there's an over allocation to equity markets, and that could find its way back into bond markets. That would push yields lower. So there's a little bit of sentiment that's reluctant to see further equity gains, and we've seen some negative sentiment. And there was also that news over the weekend that hasn't helped sentiment with the mercenary Wagner Group making its way to Russia. Now, that move towards Moscow was cancelled, and the Wagner Group is now headed to Belarus, but it still does sort of weaken sentiment. So look out for oil. If things get worse for Russia, then and there's disruption within Russia as a government, and Putin struggles to keep hold of control, then we could see oil prices spike higher. And the rationale for oil prices spiking higher would simply be that the Russian supply of oil would not be getting to market so readily. So look out for WTI for potentially spikes higher on any sort of further escalation of the Russian crisis with the mercenary group Wagner sort of departing from supporting Russia in a very clear way. Gold continues to move lower. Now, the reason gold's been moving lower is because of the comments from Jerome Powell last week at the semi-annual testimony. A lot of Fed speakers sort of saying, yeah, our base case is 2 more rate hikes to come. So that 2 more rate hikes to come has just been seeing traders getting concerned that there's higher rates for the US, so that's supported the dollar last week. We also saw yields sort of spiking a little bit higher at some points during Powell's testimony. That's weakened gold. Gold finding some buyers now, the dollar weakening at the moment. But that's the kind of general outlook. And one thing to note, you know, you can see gold finding some support now. Medium term, I'm expecting gold to find buyers very much here, but we'll have to see how that continues with the short-term interest rate markets and what they're saying. You can see now that short-term interest rate markets are just sort of, you know, expecting really nearly 1 more interest rate hike. Now, the Fed's saying there's 2 rate hikes to come, according to their last dot plot. But obviously, if the data changes, then they can change their mind. And what will change the Fed's mind? It's going to be the Fed's core PCE data. That's the Fed's preferred measure of inflation. That's coming out this Friday. So it'll be a huge data point. We'll cover that. And I'll be covering that on Wednesday's workshop, exactly how to get ready for that. We'll also touch on it today. And markets at the moment are giving 69% chance of a 25 basis points from the Fed. And that pricing will change depending on what happens with the Friday data point. Okay, let's now get into some of the detail for the calendar. Now, we have seen some more bad data out of Europe. Now, if you go back to last Friday, we saw a number of PMIs very weak for Europe. You see that big drop, and we saw some selling in the DAX on those news. We saw some selling in the euro as the services sector became much worse than the market was expecting. You see these lightning bolts by the data points. That shows below market's minimum expectations. So for the whole Eurozone, across services, manufacturing, and composite, all the worst case scenario below market's minimum expectations. So that has been weakening the prospect for Europe. We've also seen German IFO data coming in below market's minimum expectations. So that has opened up a sell bias on the DAX. That did for Friday, and that carried on a little bit today. I'm neutral at the moment because the ECB themselves, what they're expecting is maybe 1 more interest rate hike in July. That's what the ECB have kind of committed to, and then they're going to be data dependent. And what are they looking at? Inflation. So again, core inflation is very important. And at the moment, you can see that there's an 84% chance of a 25 basis point rate hike in July. So what's going to stop the ECB hiking interest rates in July? Well, it's going to be only if core inflation is moving significantly lower. So that's going to be very important for this week. We've got Eurozone inflation coming up. ECB McCall's speech, just watch out for any hints from ECB speakers that they won't be hiking interest rates in July. If you see that, that would impact the euro, so be aware of that. ECB's President Lagarde speaking. At the moment, the base case is 1 rate hike in July and then see where the data takes them. So that's where they're at. Any deviation from that narrative will be important. Particularly watch out if the ECB start indicating, you know, another interest rate hike after July. You'd likely see the euro gain against the pound. I would anticipate would be most likely reaction in that instance. Tuesday, the best data we have another couple of speakers from the ECB coming up, but then the best data that I'm most anticipating is the inflation data. Now, if you look at the headline, you see the headline is expected to come in at 3.4%. So again, down from the prior 4.4, and the core is expected to come in at 3.9, down from the prior of 4.1. Now, if you just take a look at the core inflation print, you can see that it has been steadily falling. Core 4.1, headline 4.4. So what we want to look for is if this comes in below market's minimum expectations, below 3.7 for the core, below 3.2 for the headline, then you expect the CAD to weaken. So we'll expect upside in dollar CAD. So this prints below 3.7, that prints below 3.2, expect upside in dollar CAD. I'd use daily pivot points to trade that. And if you look at the Bank of Canada, you can see that at the moment, short-term interest rate markets are expecting another interest rate this year, and it's a 69% chance that they're going to hike by 25 basis points on the 12th of July. But if the inflation print comes in below market's minimum expectations, that likely get priced out because markets might think the Bank of Canada can be patient and wait to see how inflation develops before definitely hiking at their next interest rate meeting on the 12th of July. So not too long ago to go before that meeting. However, if it comes in hot and the core comes in above 4.1 and the headline comes in above 4.4, so if they come in above the prior, then expect the CAD to strengthen because markets will be expecting more interest rate hikes to come from the Bank of Canada. So in that instance, I'd look at trading the Canadian dollar against the weak currency, or I'd expect dollar CAD shorts for a short-term opportunity. US consumer confidence is also coming up tomorrow. Again, the best opportunity here will be on a big miss. So if this comes in below 100.5, then I would expect short-term upside in gold. Why? Because if consumers are losing confidence, you'd expect that to mean lower interest rates, you'd expect yields to fall, the dollar to fall, and that should support gold to the upside with inflation expectations staying pretty much as they are. Wednesday, a number of significant speakers coming up. Got the monthly CPI indicator for Australia. Again, the best opportunity here will be if it's a big miss. So if this comes in below 5.8%, then I'd expect to see Aussie New Zealand dollar downside. So below 5.8, I expect Aussie New Zealand dollar downside. Markets are already expecting the RBA to be quite aggressive. You can see they meet on 4th of July, and markets are seeing a 35% chance of a 25 basis point rate hike, and they've got a peak rate of about 4.6%. So there's a couple more interest rate hikes to come according to short-term interest rate markets. So the best opportunity will be if this is a big miss. So below 5.8, and I'd expect Aussie New Zealand dollar downside would be the thing that I'd be looking for. Got ECB and BOE speakers. Bank of England, they are in a difficult position now because the Bank of England is having to fight inflation, stagflation, which is when you've got high inflation and low growth. And the Bank of England had to hike interest rates by 50 basis points last week. It was a surprise move, and it was only because UK inflation is so high. And if you just take a look at the inflation rate in the UK, you'll see that the headline is 8.7, but worryingly, the core print is 7.1%. And you see how it's moving in the wrong direction? So that meant the Bank of England last week had to hike interest rates by 50 basis points to 5%. And look at this, short-term interest rate markets now see the Bank of England peaking over 6%. So that's the sort of interest rate hikes if the problem is that's the sort of interest rate hike that is very, very high. That's 4 25 basis points at least, possibly 5 25 basis point hikes still expected. So that's likely to crush UK growth. At the moment, there's about 2 million new mortgages that are being renewed. The average 2-year mortgage interest rate is 6%. And so with a 6% mortgage rate, I think the average mortgage is going to rise by about £270 in the UK. So that is coming out of people's day-to-day expenses. So there's a lot of economic strain coming in the UK. And if terminal rate goes up even higher, then potentially that could get worse. And that's stagflationary. So that's what markets are worried about. There's a 50% chance. Look, they're going to hike by 50 basis points on the 3rd of August. So you can see how problematic that is. That's a significant thing to be looking at as we move forward. And if Bank of England economist Hugh Pill, if he pushes back against that pricing, so if he starts looking at this pricing and says, oh no, you know, this is all wrong, then watch out for euro pound upside. So if Bank of England Pill says, oh no, we're only going to hike once more, or I'm confident that inflation is going to come down, then you start to look for euro pound upside. If he's sort of hawkish and says we have to do more, hike more, all of that's been priced in. So there isn't an opportunity. It's only if he goes the other way that it's an opportunity. We got Fed Chair Powell speaking. Again, the narrative here is Powell's been affirming a dot plots picture that has 2 more rate hikes this year. So if Powell affirms that, that's all priced in. But if Powell says no, it may just be 1 interest rate hike, or no interest rate hikes, or I'm confident inflation is full, anything like that, then you'd expect the dollar to fall, yields to fall, and you expect upside in gold. We covered what to expect from Lagarde. She's speaking as well later on in the day. Got Powell speaking again on Thursday. That's the same narrative. If he affirms 2 rate hikes to come, he'd already done that last week. There's nothing new. The thing to look for Powell this week, and remember, you've got that core PCE print coming on the Friday. So watch out here. You know, if he's seen the data coming for the day after, and the chance he has, watch out for any really, dovish message. If he says, oh, we may not have to hike interest rates twice this year, we're winning the battle against inflation, anything like that, you expect the dollar to fall, so you expect the dollar to weaken, euro dollar upside, should be supportive for stocks, should be supportive for gold. If he affirms the hawkish stance, there's nothing that's tradable because that's already what he's been saying. The couple of speakers coming up later, Bank of England's Tenreo and Fed Bostich. Now, Tenreo is a dove, so the only possible opportunity if she turns more hawkish, she dissented about 50 basis point rate hike. So if Tenreo confirms that dovish picture, that's only what's expected. If Tenreo turns hawkish, that could give a little bit of upside to the pound, but really at the moment, I wouldn't be chasing pound longs because it's a very stretched position. On Friday, we got some interesting data out of China. If you look at the China stock, China 50, you can see that there's been speculation growing that China's going to be supporting its economy. And we saw some upside in China 50 on hopes of lower interest rate cuts from China, more stimulus from the government. So if this comes in very low again, you'd expect the China 50 to fall lower and then find dip buyers on hopes of involvement from the Chinese government. If it comes in high, the market's percent comes in higher than prior, 55, the manufacturing comes in, 52, 53. If that comes in higher than the market's expecting, that will really relieve markets. So you could potentially see this giving markets a bit of risk on, because a lot of analysts and a lot of market participants have been surprised at how slowly China is recovering from its post-COVID slump, and that's taking longer than many analysts have been expecting. So if it's a disappointing print, that's only what people knows. If it's very disappointing, you'd expect dip buyers on hopes of the Chinese government supporting China's economy, more interest rate cuts from the People's Bank of China, more fiscal stimulus. If it's a high print, then you're going to see a bit of a relief rally, and some of the recent selling will unwind. That's what I'm mostly expecting. Market can always surprise you, of course, so you have to always manage risk carefully. On the Friday, we had the Eurozone core inflation print. ECB, a number of ECB speakers have saying it's the core, the core, the core. Core print, very important, expected to actually rise to 5.5%. If you look at the last few prints from the Eurozone, what you can see is that The last core print was at 5.3, so it is moving in the right direction, but it's still quite elevated, and it is more than double the ECB's target, right, which is 2%. So the best opportunity here will come from a big miss in the data. Market's projecting it to rise up to 5.5%, so that's a concern. They're expecting it to go in the wrong direction. So the best opportunity here will come from a miss in the data, particularly if it's 5.2% or lower for the core, 5.4% or lower for the headline, then you'd likely see the euro lose value. So I expect something like euro US dollar downside would make sense, or euro pound downside, that would make sense. So missing the data's best opportunity. If it's high and hot, then there might be a bit of upside in the euro, maybe trading against the euro pound, but the best opportunity is in the miss in the data, because markets were already expecting a slightly more aggressive stance from the ECB. The best data point of the week, in my opinion, is this US core PCE print. It's the Fed's preferred measure of inflation, has been since about 2012, and the Fed really respond to it. So if we get a big miss in the data here, that will mean that some market participants will consider the Fed not needing to hike interest rates twice this year. That would result in dollar debt weakness, euro US dollar upside, stock upside, should be positive for commodities, gold and silver should move to the upside. What I'll be looking for is something below 4.6 for the core and below 0.1% for the month-on-month data, and the headline coming in 4% or lower. That I would anticipate to really lift gold. That's the best opportunity that I can see. I will be looking at this on Wednesday. Do come back on Wednesday for the Wednesday workshop, where we will look in depth and in detail as to what to expect for the US core PCE print, and I'll show you the different outlooks that I have. Okay, folks. I hope everybody's well. I hope that all makes sense. If there's anything you're not clear on, please speak now. Otherwise, I will be back on Wednesday, and I'll be getting us ready for that core PCE print and looking at some potential levels in gold to help. Otherwise, I wish you all a very good afternoon. Thank you very much for attending, and I look forward to being back on Wednesday. Hi, Saeed. I asked support to upload it as quickly as possible. If you'd like to contact support, that's an extra voice, just reminding them that I am asking support to do that as quickly as possible, and hopefully it will be sooner onto YouTube. You're welcome, Saeed. Thank you all very much. Take care, and I look forward to seeing you later. Thanks, everyone now. Goodbye.